TV18.
You started Young Turks at 20 years back,
20
right?
years
This is
ago,
the 20th anniversary. Today, everybody talks about unicorns. People talk about the startups. You were way 2 decades ahead of that time.
Wow.
So, many congratulations to you for that.
Thank you. CNBC-TV18 turns 23 years today. It's been 2 decades since we started covering India's startup ecosystem. Many things have changed. We are now home to more than 100 unicorns.
Absolutely, Shruti, and what a journey it's been. But amid all of these changes, CNBC TV18 has been the only constant. We thank you, the viewers, for your continued support. Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always, Shruti Mishra and Ritu Singh. These are the top headlines from the startup world.
Tiger Global-backed Vedantu has laid off another 385 employees. Sources tell CNBC-TV18 the EdTech unicorn has fired more than 1,000 employees in 3 rounds of sacking since the start of 2022.
Meanwhile, Byju's, which sacked 2,500 employees in October, is seeking to restructure its $1.2 billion loan, asking for easier terms as it struggles with steep losses and high costs, according to a Bloomberg report.
Zomato backer Bloom Ventures sets up its largest ever fund with over $250 million. An early-stage investor in more than 100 startups, including Spinny and Purple. Bloom looks to back 30 to 35 more startups from the new fund.
Apple budges on App Store pricing, introduces 700 new price points for developers globally. The move comes shortly after India's monopoly watchdog, the CCI, imposed a penalty on Google for its App Store policies.
Microsoft signs a 10-year deal with Nintendo to make the popular video game Call of Duty available on Nintendo consoles. But that's only if Microsoft's record acquisition of Activision Blizzard comes to a close. Well, those are the headlines we're tracking for you this evening. Gaming startup Nazara Technologies founder Nitish Mittersain has returned as CEO of the company and, as per his LinkedIn post, looks forward to making a strong impact filled with positive intent and hard work. The development comes nearly a month after Nazara's former CEO Manish Agarwal quit the position to pursue his entrepreneurial journey. To talk to us about the road ahead at Nazara Technologies, joining me now is its founder and CEO Nitish Mittersain. Nitish, welcome back to Startup Street. It's been a week since you've come back to the role of CEO at Nazara. Is this an interim arrangement, Nitish, or are you back for good? Also, what are your top priorities now?
No, thank you very much for inviting me today. I'm very much here to stay. This is not an interim position, and the objective is to keep the strong growth momentum intact across, the various business verticals we are operating in. There's a lot to be done, and I, along with my team, are very focused on, executing everything that we have to do to make sure that Nazara continues to grow rapidly and achieve and maintain market leadership in various verticals that we are operating in.
All right. Nitish, the focus now, I believe, is more on the organic growth of your existing businesses. If you could elaborate on your growth plans, collaborations, and new offerings in the pipeline.
Yeah, sure. I think, as you are aware, Nazara operates in multiple sectors within the gaming space, may it be gamified learn or the esports space or the premium space, also the skill-based real money gaming space, and lastly, the ad tech space. We have 5 verticals we are operating in. And for us, making sure that these businesses grow strongly organically is where the real value happen for all our stakeholders. So I think a lot of focus there is going to continue. I think that said, key strategic acquisitions will continue to happen, not only at Nazara level, but at subsidiary level, especially in markets like today where, a lot of assets are available at attractive valuations. Another focus and strengthen leadership teams in each of our verticals and each of our companies going forward into FY24. I think these are the areas of focus for us immediately.
Nitish, as investors turn conservative and startups cut costs to secure a financial runway, you spoke about acquisitions. So will Nazara look at acquiring companies next year? How much capital will you invest towards acquisition? And is there an estimate number of acquisitions that you will be doing?
Yeah, we don't target acquisitions in terms of value or specific numbers. I think we would like to do slightly larger acquisitions than what we have done in the past because our overall scale of revenues is increasing, and we want to make sure that the acquisitions we do kind of, help move the needle for us. Nazara has a cash-rich balance sheet of over 600 crores of cash. We're a relatively debt-free company. So I think we are in a very good position to take advantage of the opportunities presented by today's market to us. If you look at the recent WildWorks deal we did in acquiring Animal Jam, the product in our gamified learning business vertical, it was done at somewhat of 1x of revenue, 4 or 5x of EBITDA. So I think we can clearly see that great products and great teams are available today at very attractive valuations, and that's what we are focusing on. Like I said, also many of our subsidiaries may do their own bolt-on acquisitions, and Nazara will play a very active role in
Okay.
helping them do this. Lastly, we're also actively pursuing maybe some strategic fundraise initiatives at some of our subsidiaries to bring in investors who can add strategic value to these companies and businesses. So that's another activity for us to carry out over the next few months and quarters.
All right, lots of big plans there, Nitish. But I want to talk to you about the sector, and the sector is currently facing a lot of issues, be it GST or online real money gaming, often conflated with gambling. What is the way out of this conundrum? What conversations are you having with lawmakers and industry colleagues on both the legality of skill gaming and the GST angle?
Sure. Specifically on GST and regulations around the skill-based real money gaming space, we are actively participating in many industry associations, and various representations have been made to the government, and the government is giving due consideration, to all these representations that have been made. So we are very positive that the right steps will be taken here in terms of what's the right balance to strike in terms of this industry continues to grow. At the same time, I think important things like responsible gaming and a consumer first approach is extremely essential for the
Yes.
long-term sustainability and growth of the sector. And as Nazara, we are fully committed to it.
Okay.
Taking a step back, I think I've realized over 2 decades that the gaming industry continues to be a disruptive industry, rapidly changing industry. Consumer preferences, tech preferences, technology changes, regulations change.
Sure.
And I would say one of the big virtues of the Nazara platform is to be a very stable platform, call it a strong EC. And I think that's what us as we keep building out our business in an uncertain environment. We are able to actually take advantage of this uncertainty that throws up many opportunities to us.
All right. Nitish, you've already made some active moves in the Web3 space. If you could elaborate on what more you're looking to do and what is your view on the play-to-earn model in Web3 games, do you think it can become a successful in India, the model?
Yeah, we looked at Web3, blockchain, NFT gaming very closely in the last 2 or 3 years. We didn't take a lot of active steps because there was a lot of froth in the market and a lot of unsustainable businesses being launched. That said, I think going forward, definitely these technologies will have significant value addition to the gaming business and to the end consumer or the gamer. And therefore, surely Nazara will take a lot of steps towards ensuring we kind of plug this gap within our ecosystem. We're already working on a NFT launch in one of our popular cricket games, which we hope to launch in Q4 of this year. So yes, very much on it. I do think play-to-earn models are evolving. Some of them have been Ponzi-nomics, which have not been sustainable, but these will evolve fast, and value creation around these technologies will surely emerge. So we're taking them very seriously.
All right. Nitish, Nazara is launching original content and esports, and the focus is on creating your own IP. While currently it is eating up your margins, when do you hope for it to be profitable? That's the first part of the question. And the second is that, like we discussed, the company has multiple engines of growth. You've diversified in geographies, products, and revenue models. Immense potential in the gaming sector, given that it is now expected to hit $7 billion by 2026. What, according to you, will be the big levers of growth?
Sure. So on esports, Nazara continues to be the market leader in India with over 80% market share. And I think it's very imperative for us to invest in the right IPs so that we can create value for the long run. Even today, when we are investing in a lot in creating these IPs, we continue to be profitable. We are not burning a lot of cash or making losses to create these IPs. But yes, some of these reinvestments do impact our margins. So if you look at our Nodwin business, the margins have been muted, but we expect those to increase. One great example is Playground. We launched Playground IP with season 1 that had 17 million viewers. It was broadcast on Amazon Mini TV, and we're launching season 2, where we expect to 2x the amount of viewership, and also the sponsorship money and the media rights that comes in.
All right.
Is mature, you will see a very fast scale up in terms of what we can earn through sponsorship and media rights, and that's what's really going to boost the margins.
Okay.
But we are not chasing margins necessarily in this particular sector of our business. I think what we are really trying to make sure is that we continue to be market leaders, build enough moats around us, so that as this business explodes, we are leading from the front.
Sure. All right, Nitish, so the focus is on growth and not on the margins currently. We've completely run out of time, but many thanks for joining us on Startup Street, and wish you the very best with all your future growth targets.
Well, moving on, agri-tech startup DeHaat, which offers a wide range of agricultural services to farmers in India, recently raised $60 million in a Series E funding round co-led by Safina Ventures and Temasek. The startup looks to deepen its penetration in the country and break even in a year. Existing backers, RTP Global Partners, Process Ventures and Lightrock India also participated in the new round. Now, DeHaat uses artificial intelligence to help 1.5 million farmers source raw materials, find advisory and credit services, and sell crops. Joining us now to discuss the company's growth roadmap is Shashank Kumar, the co-founder and CEO at DeHaat. Shashank, thank you so much for joining us on Startup Street today. Like I said, you recently raised $60 million in Series E round, and this is your third fundraise in the last 2 years. So what are you currently valued at?
Hey, Ananti. So thanks for having me here. It's I think fundraise is just a milestone, and since DeHaat has been consistently growing, as you know, the overall growth trajectory has been more than 60x in last 3.5 years. So this is very well, supported by all the fundraise we had. In terms of value, again, we don't disclose it publicly, but currently it's in the range of 700 to 800 million post.
All right. So in the range of 700 to 800. Even after raising these funds, you still have about 70% of your last raise still in the bank. So you're clearly well capitalized. So what was the rationale behind this raise, and how do you plan to spend this money?
So as you know, that DeHaat is a full stack platform,
right,
and we have been trying to build a very farmers friendly ecosystem for around every individual Indian farmers. And if you look at the platform, in fact, there are a number of parallel offerings for every individual farmer. So I think the first objective of the raise is to bring more and more value added services for farmers, whether it's mechanization or data driven advisory services or soil test, financial services, insurances, so many other things. So obviously we need to deepen our technology when we have already built our network across 12 states, in more than 162 districts, in more than 118,000 villages. So the first objective is to deepen and strengthen our technology and offerings for our member farmers. And the second is, again, yes, we are very well capitalized, but at the same time, we want to keep our eyes open for any future upcoming opportunity to build a stronger moat for DeHaat.
Absolutely. And we're going to discuss that in detail in a bit. But you currently cater to over 1.5 million farmers across 11 Indian agricultural states. What's the expansion plan? What's your global expansion plan? And how do you plan to grow your customer base even further?
Well, so India itself is a large market and large country. So that's where we have our current focus as far as farmers base is concerned. But yes, so for next 6 months, our aim is to go deeper and deeper around existing geographies, existing infrastructure, what we have already built across 12 states, which are all the Eastern Indian states, and then MP, Rajasthan, Maharashtra, Gujarat, Chhattisgarh, Haryana. And then after 6 months, again, we will start going further down south in a similar way how we have been working with farmers, across services, across crops. In terms of global expansion, yes, recently we have started export early this calendar year. So, in fact, that's kind of additional offerings for farmers to to give them better price realization instead of relying just upon the domestic market. We have already started exporting to Middle East, European Union, considering we have a very much controlled backend in terms of right package of practices, in terms of digitized farmers network, and that's exactly what global market always looks for, which is traceability and food safety and food security related factor.
Absolutely. So you've already started exporting, and then you're also looking at down south in India. Now for FY22, you saw your revenues at around a little over 1,200 crore rupees, and the sale of agricultural inputs accounted for most of your revenues. So what's the target for this financial year? Where will you see most of your money coming out of? And what about losses as well? Because your losses in FY22 spiked to 164 crore rupees.
So it's not a good idea to rely upon public data, but let me, rectify this.
Yeah.
So 1,300 crore of last year of business, as you know, that the split across output and input has been same as earlier. So again, so 70% of our total business, it comes from the offtake when we aggregate various farm produce from farmers. We sort it, we grade it, we pack it, and then it goes to all the institutional buyers and now to the global market. Then remaining 28-29%, it comes other way around when we provide quality seed, fertilizer, and pesticides to farmers. And then last, not the least, is the 1 to 2%, which is mostly the financial services and the network-based services. So that this is split, if you look at the trajectory of DeHaat, this split more or less remains same over the years. And even in the current financial year, this is going to be in the same range. As far as the losses is concerned, that's mostly around the growth. If I can tell you that as on 31st, March 2021, we had our presence only around 37, 38 districts of India. And versus that now it's more than 162 districts. So as you can understand, the losses mostly around the growth of the network and the infrastructure we have been building it to organize the last mile.
All right. And one of the first things you said on the show today was that you saw 60x growth of the last 2.5 years. And it's been phenomenal for you guys and has laid a foundation for a clear path to profitability. So when can we expect you to turn profitable? What's the journey looking like?
So we have been following the same trajectory. And as you rightly said, that, that first in last 3.5 years, we focused on growth. And now when we have our presence, pan-India, when we have reached to a certain scale, so we have already started consolidating and started focusing around profitability and efficiency. And that's the reason why 12 months from now, we see ourselves breaking even on quarter-on-quarter basis.
All right. And, I have to ask you, you laid off a few employees in August of this year. Will there be more layoffs at DeHaat? What is the plan?
Well, so to rationalize the cost, we don't believe that layoff is the only option. I can give an additional information that the number of folks we had to lay off in last 3-4 months. In fact, we have onboarded 2x of that number already.
All right, so you've onboarded 2x of the number that you laid off. All right, Shashank, thank you so much for joining us on the show today, and we wish you all the best going forward.
Thanks, Ananti. I always enjoy your conversation. Thank you. Bye-bye.
Thank you. Well, on that note, it is time for us to head into a short break. But coming up next, UPI transactions in semi-urban and rural stores have seen a 650% rise from January to October this year compared to the same period last year, as per Pay Nearby's annual report. This and more on digital transaction trends on the other side. Stay tuned.
Now, UPI transactions in semi-urban and rural areas have seen a 650% rise between January and October this year compared to the same period last year. Digital payment network Pay Nearby's annual retailonomics report has found. Now, this report is based on business data collected during this period across 1 million plus retail touchpoints across the country. Now, it finds that Kirana stores saw a 25% growth in value and 14% growth in volume terms in assisted financial transactions overall, indicating a shift towards branchless and digital banking. The report also finds that MPOS business has seen more than 100% growth, along with 25% increase in demand for micro ATMs and MPOS instruments. However, Cash withdrawals through micro ATMs have also seen a 25% increase in value and 28% in volume. So let me welcome Anand Kumar Bajaj, who is the founder and MD and CEO of Pay Nearby, to analyze the findings of this report. Anand, thanks very much for being with us here on Startup Street for this very special episode. We're also celebrating our 23rd birthday here. First, while there is a clear indication in your report that there is greater adoption of digital in these semi-urban rural areas, there's also been an increase in cash withdrawals, your report finds, even if it is for smaller amounts. So what is the takeaway here? Cash remains king, but there is some shift towards digital?
Yes, if you see, India is two parts, Bharat and India, with the digital divide helping India evolve in a different manner. Last year, you would see 2 trillion INR grew in cash alone, and simultaneously there was a spurt in the digital adoption. So these are two states of mind, states of economies operating at a different level of speed of efficiency towards digitization.
All right, so we're continuing to see that dichotomy between two parts of India. But, Anand, there was some concern after the pandemic that, once the pandemic recedes, it is starting to do, the momentum in digital may or may not sustain. Now, UPI, of course, seems to be one of the more popular methods for digital adoption. But what sort of growth have you seen in, other forms of digital payments?
So, ma'am, you will see that amongst the 600,000 villages, 6 lakh villages, 32,000 bank branches were not enough. The millions of PMJDY accounts opened had almost all their cards, debit cards, expired because of chip and PIN guidelines coming in. I'm glad to report that the cards reissuance has started. The rebank phenomena has started in India again, where the cards which were expired are being reissued. New current accounts, saving accounts are being opened by tons in the deep interiors of the country. And that is helping people adopt to digital faster. So these are two tracks, and they will continue to propel on their own, at their own speed.
Well, that certainly is heartening, and we'll come to some of this credit pickup in just a bit. But, it appears that the local Kirana store is sort of evolving into what you'd call a multi-utility point for financial needs of customers, especially in these tier 2 cities and beyond. What sort of bill payment, mobile recharges, travel booking trends are you seeing there that could indicate that this demand consumption trend is picking up in the post-pandemic world?
Absolutely, ma'am. And let's look at the pandemic, the tough times when these retail partners stood by the citizens to help deliver the policy objectives of the government of India. The DBT subsidy, the registration on Umang or on the COVID vaccination or job registrations, all of these things were being relayed through these digital Pradhan partners of Pay Nearby, for example. That has augmented their trust to almost a sovereign grade. People relate to them as if they are part of the government. And basis that, now they have started harnessing that trust factor to fetch services in any other form also. OTT or bill payment BBPS from NPCI, or for example, EMI collection by 50 plus microfinance institutes is happening at these retail outlets. And so is the growth in the digital payments. So this is more a trust harnessing in sachetized form at these retail points that you are seeing now as a growth momentum for digital here.
Anand, so if you could also tell us, some of the measures announced by the Reserve Bank of India in today's policy with regards to the UPI, the enhancement of the Bharat bill payment system as well, how is that going to impact the digital payment ecosystem?
It's all favorable and in line with the momentum. You have seen India grow on the telecom rails first. On top of it, the banking and payment rails came along, and now the digitization spree is helping take the high end of technologies to the bottom of the pyramid, ma'am. Very clearly, the new launches announced by Reserve Bank today on BBPS only augments multiple services on BBPS, which brings much more convenience to the citizens. Likewise, the UPI single debit, which is called bulk debit and multiple credits going out, will further simplify services for people. So these are all in tandem. The launch of e-rupee or the CBDC recently, all of that are actually helping reach visibility, transparency into the mass market.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.